Good morning, Paul Georgie from Allendale. It's July 26th, Thursday morning, and the USDA just released their weekly export sale numbers. Corn came in at a negative 140,000 tons. The trade was looking for a positive 250 to 300. Soybeans 710 was the number, 710,000 tons sold. Wheat 367. They're in line to a little positive there. Corn very negative, and a confirmation of what we've been talking about here for the last week, where the talk was China was selling back some of the corn purchases that they had made, and it looks like that's what happened here. I haven't looked at the breakdowns yet of where the negatives came from, but certainly showing that the high prices are impacting demand in corn. Some other news that we're focusing on here this morning that may have a greater impact is out of the macro markets. The EU central bank President Draghi, over just early this morning, announced that he will do whatever it takes to preserve the euro, and that has caused the euro to strengthen and the dollar to weaken sharply here as we speak. We're down about 60 points or so. It also has caused bond yields for Spain to drop below the 7% area. So an attitude there of taking on more risk, with the central bank president making that statement. That's having its impact, and certainly could have a supportive impact to the grain markets and commodity markets as the trader mentality becomes feeling better about the whole situation and expecting to take on some risk. Other news, the weather. Of course, we've got something for everybody here today, the way it seems. Weather forecasters, if you get a bunch of them here this morning, they all got a little bit different twist to it. Some got 60% coverage, some 90% coverage in the next several days in the Midwest. Others have the hot temperatures ending today or early, or shortly here this week, and then cooler temperatures after that. Others got temperatures increasing later in the week. So the bottom line is the attitude is that we will get some rain and some moisture coverage for most of the Midwest here over the next 5 to 10 days. If that occurs, it certainly could be positive to bean production. Some of the yield surveys and tours that are going on out there now are suggesting that the bean plant has still a wide variation of potential as far as yield. If we can get some moisture, there's a chance that we could still see some decent bean yields in some areas, and actually some very good yields in others. So there's less concentration right now on crop deterioration and weather at this point in time. They're focusing on the demand side, on the outside markets, and on the chart patterns. I think the move that we've seen here early this week, the outside day down on the charts in soybeans and in corn, two critical chart patterns that closing out the week, if we close weak for the week here tomorrow, we could see some further pressure there if it bounces back. And the corn is fighting with that $8 area in the December contract, and a close above that would suggest that we've got more upside potential. So some consolidation in the grain markets here today. We've seen a quieter session overnight compared to yesterday's session, and traders are taking a breath here, trying to figure out the next direction in the grain complex. In the livestock trade, the cutout values were mixed in beef. Choice up 15, select up 11. Pork cutout was up 16 cents. The factors there and the news stories that are hitting the airwaves on national television and are talking about higher meat prices, higher food prices down the road, and we're starting to see that already in the pork complex. We're seeing the effect of it as futures markets are stronger. The main reason there is lighter weights due to heat stress, lighter weights because producers are moving hogs a little earlier simply because of the cost of production. The high price of corn, the hog producers are cleaning out their pens a little quicker for that reason. In the livestock, we see cattle moving to town here. Cattle feeders are battling this week, hoping to get a higher price for some fed cattle because some of the break-evens or closeouts that we're hearing are anywhere from $275 to $300 a head loss that cattle are going to market right now. So a lot of stress on the agricultural producers here, and we hope that a rain covers the area here in order to help attitude as much as it will help crop conditions. Stay in touch with Allendale's research. Take a look at the Allendale Research Center. We've got a lot more information there. You can get that just by going to our homepage and clicking on the link and subscribing. Or if you got any questions, just give us a call at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning.